Anurag Kataria, he's VP and Business Head, ITI's Investor Services, and he joins us live on the show. Anurag, hi, welcome. First of all, the kind of sell-off that we saw in the last 2 days, some bit of a sanity coming back into the markets today, but is it there to stay?
Good afternoon, Manisha. If you remember, for last 3-4 weeks, we have been talking only about selling precious metals, specifically bullion, and that too, more weightage was on the gold. And we are happy that the prices have come to a level wherein at least you and me can go and think of buying gold. It's come to the affordable level, and that is a general sense which we are getting. You would be surprised the kind of calls we have been getting mostly from my female family members who have been asking about the price, and that shows the subdued demand which people have been waiting to purchase gold. So I think the kind of sharp decline we have seen, that wasn't expected, but the declines were anticipated in the market. That is not something new. Again, we had spoken about April as a month to watch out for bullion space, and April again repeated the story as usual. So I think given the prices around $13.50, $13.40 seems to be a tempting price at this point of time if somebody is looking to enter into gold on a long side. Although it might be a painful and a long journey northward, but I still believe that gold cannot be replaced. I don't think there will be any other inflationary hedge or a currency hedge in coming future, probably next 3, 4, 5 years. So gold seems to be a good level to enter, start accumulating now. And we have changed our view from bearish to go long cautiously. Probably on the downside, we are looking at a level of $12.80 or $12.75, which has been spoken about most of the international brokers. Honestly, there are no levels below this if you look at technically, but $12.30, $12.50 kind of a level we can keep in mind. On MCX front, I think 22 to 23,000 will be a good support, but retailers should start accumulating gold. That is what we strongly feel.
Sure. Also, Anurag, many people are now calling it a flash crash, and the point also being that there are not many strongholds now into the market. Many people would have already sold, especially in futures, because physical gold anyway, nobody has come out to the markets and sold. So, even if we start buying at this point in time, what kind of an upside in the Indian markets are you expecting for the near term?
See, Indian markets, as you are seeing, Manisha, the kind of rebound we are seeing in the equity, India is a specific case wherein a lot of clues can be taken from. The way the government is, pushing gold as in disinvestment or probably not a lucrative investment for retailer. There is a system which is working for gold to be not an investment product, but there is a general sense wherein everybody is excited about these kind of gold prices. So I feel given the rally in equity market, rupee will be one factor which might dampen gold prices, but otherwise we are looking at say 27, 28,000 kind of a range by June, July, and that will be the probably end of the wedding season. So 26, 27,000 seems to be an immediate possibility, and then onwards it might be a little bit time taking process, but we are expecting 29 to 30,000 by end of year.
Sure. Anurag, what's your sense now coming in for silver? Because that outdoes gold on the upside or the downside as well. And there have been sharp losses coming in for this space as well. People are saying that 50, 55,000 is a level that you may not see very soon. But on the downside, what kind of levels do you see supporting at?
Support level, if you are looking at, Manisha, we would be looking at around 38 to 36,000. You have rightly suggested that silver has a tendency of huge volatility compared to gold. And the kind of swings we see in silver are pretty sharp, anything nowhere near to gold. But the base metal pack as such does not have a clarity much coming in from the international market, and that is weighing pressure on silver. So silver on a standalone basis, probably 38 to 36,000 kind of a level seems to be a good support. Upside, I think again 46, 48,000 can be a resistance.
Anurag, also what's your sense now coming in for the crude prices? Because we've seen sharp declines onto that one as well, as not as much as precious metal space, but this space also seems to be breaking important psychological support levels.
Manisha, idea is bigger because you have been telling, and we have been also seeing since January onwards, US has not been importing crude, and the inventories have been rising. We have seen Brent first time coming below $100. So these are positive signs which equity market or stock markets around the globe would like to take care of, and probably these prices should be under control for everybody else to perform. So I strongly feel that $84, $85 seems to be a first kind of a support for WTI. But otherwise we are not bullish on crude prices, even though the range can be 82 to 86 to $88. But $6-8 kind of a range, it will be a range bound trading. We don't see any kind of sharp price rise coming in.
Anurag, there has been, while of course the Chinese data has been on the lower side, the New York manufacturing numbers also were on the weaker side, and that really seems to be weighing on for the base metal prices and crude as well. But on the other side, there has been this Boston bombings, there is this North Korea issue coming back on the surface there. Do you think there could be some support coming in because of this?
Yeah, there could be some support coming because of this, and probably the bigger picture, Manisha, would be the how Japanese government takes care of these flexible inflation policies which they might implement, and that could be the game changer for commodities across Asia, and that is one event one will have to watch out for all the markets, and probably if that happens, Japan will be the second country after US who could be able to print the notes as and when they want to, and this will change the entire equilibrium of commodities. So I think Japanese event will be much bigger, and small data points can be accounted for intraday movements, but there will be some pressure on base metal for some time.
Kaushal, hi, afternoon. Start off with your view on gold, and what trading strategy would you recommend?
We have seen some disastrous selling in gold once it has broken $1,540 on the international chart, which was a critical support for gold. It was a critical support since June 2011, and we have seen a great sell-off after these levels have broken. Gold continues now to be on a serious downtrend. We don't expect much rally before $1,350 and $1,300 tested. So expect every rise to be a sell opportunity. On the domestic front, also we are expecting a similar southward side correction. We don't expect much great relief in the domestic prices of gold. One can sell gold for intraday trading session at around 25,650 with a stop loss of 25,700 and 750 and a target of 25,400. Every rise will be a great sell opportunity. It is very great likely that gold can test $1,300 very soon, and maybe probably below those levels. So till $1,300 are tested, one should not expect a great upside in the gold, and probably every rise is a great selling opportunity.
What's the view on silver? That's corrected quite a bit too.
Silver on the similar note has seen some great correction once it has broken $26 on the international spot chart, which was again a great support for the last 2 years, which it did not break on the last 4 occasions. So we don't expect again a great relief in the upside prices of silver. Silver is very great likely to break and go below $20 and even probably test around $17 over a period of time. So I expect every rise to be a sell opportunity. On the intraday trading session, one can sell silver on rise at around 43,700 with a stop loss of around 44,000 and a downside target of 43,000. So don't expect a relief rally very soon. There's a great probability that every rise is a sell opportunity, and once the relief rally could be expected only once $20 is breached and $17 on the international spot chart are tested.
Kaushal, what about your views on crude?
Crude is yet to see its sell-off. It has just broken very critical support of USD 90 on the WTI, and every rise is a sell opportunity. We have seen the inventories not great. Week on week inventories were piling up, and the only thing which crude was holding was the tension between North Korea and South Korea. And it only until $102 or $104 were reached on the upside, crude could have seen a great rally. But before that, we have seen a downside correction. $90, which was a great support, is now broken, and we now expect crude to test around $78 to $80 on the downside. So over a period of time, don't expect again a great relief in crude on the upside. Every rise is a sell opportunity. For the intraday thing, one can sell crude at around 47.70 with a stop loss of around 4800 and downside target of around 4700.
I'm guessing you would be bearish on copper as well, Kaushal.
Base metals are big. Today we have US housing data, so expect some consolidation pattern in base metals. But yes, overall the tone in base metals is weak. The Chinese economy has not grown, and the World Bank has, IMF has revised its growth on the Chinese economy towards the downside. So yes, we have some great, not so great news.